Welcome to another 30-day challenge video. So let me start by the first calendar, like the economic calendar, first factory. So today we can see that we can trade because we don't have much of anything. We have tentative, but that's fine. So we trade normally on these days and on GG. So as you can see, we are bullish, and since we are bullish, I saw the price reach the order block right here on the 1 hour and swept liquidity. So once it gave the break structure, I marked out the equilibrium and it reached into the equilibrium. So I saw the 1 minute inversion and entered on that one. This trade was obviously wrong because the first we swept out the weekly liquidity level. So what I'm expecting is a move down or a retracement on the higher time frame. So probably into the 4-hour fair value gap right here, and then we can look for some longs. Maybe even to the this is perfect. Okay, so then we can look for longs. That's why some of these times don't like this was a solid setup, but still it didn't work out because the price is not in the it didn't retrace. It needs to retrace for me to take a expansion mode. So for this one, let me just explain something. I have some questions, if I can say it like that. What if I ignore the time? Because if you look at every single of these moves, so from here I know that I was bullish. Why? Because we created a break structure on this high right here with this candle. So from there I'm bullish. Now price takes out this liquidity level right here, and now what do we expect after taking a daily level? We expect some kind of a retracement. So let me just mark out these levels. We're gonna just mark them out with like the dollar sign to the right of it. I just need to mark this out for my own purposes because I'm starting to doubt the time of the trades, because if you look at this is a very clean price action in terms of liquidity areas. So I'll explain this now. So we sweep the high, and what are we expecting? We have the order block also right here. So we are expecting price to move down and retrace if it wants to continue higher. If we are looking at the weekly time frame, we came down to cut this liquidity, so it makes some sense to go up a little bit. Okay, so what are we expecting? We expect a retracement from this level. We retrace back into this particular order block right here. Now we wait for a 4-hour break structure, or for example on the 1 hour, if you have it. Basically size down a bit, you know. Let's do it from the 4 hour, just because this is the where we split the order block. So you expect a 4-hour break structure, which happens right here. From that point you have a fair value gap. Price retraces back into it. So what are you expecting next? We are expecting moves up in order to take out this liquidity right here. So you're expecting price to move up and take out that liquidity in this from this fair value gap. We move down to the 5 minute. Let's just see. So break structure, you wait for price to move down, moves down, sweeps additional liquidity level right here, which is, I believe, maybe even the 1 hour liquidity level. Yes, 1 hour liquidity level, boom, and we take that out into the inside of the fair value gap. From there you get an obvious break structure right here, and you have a 5 minute fair value gap. You mark out both of these 5 minutes that were formed, and you just wait for price to give a setup from either one of them. In this case, well, let's see what happened. So we reach back into the 5 minute, we move up, and we either enter on an inversion or on a break structure. In this case, no inversion possible here. We have this high, which makes this a 1 minute break structure from this 1 minute trend to the downside, meaning that I'm entering on this candle that closed above. Stop loss has to be a bit below the 5 minute, and then, or in this case, since it went so much, maybe we can put it below the low, and then you can target obvious target liquidity So this one and these ones. Okay, so these are two very relatively equal highs. So boom, easy trade. Okay, so but look at the time though. Look at the time of the entry, 14 in New York time. I don't believe that there's any like kill zones or anything during this time. So as long as I know in terms of New York, so maybe I don't know where exactly is the PM session, but still. Let's maybe go back a bit further. Let's see if we have anything from the actual order block, if we are expecting that. So maybe we can start from the 4-hour order block and then 1 hour confirm or something like that. Let's see. That would be this move. Okay, so let's drop down to the 15. We have something there. Here's another possible. So let's do the 5-minute. Okay, so we push into the 4-hour order block. From it, we are expecting a reaction. Okay, this is the first one. From these levels, maybe you expect some kind of a 1-minute inversion. Okay, so let's just mark out. We have a 5-minute break structure right here, and a one. Let's see this a bit more. We have a sweep of liquidity right here. Boom. So this is sell side, and we sweep that liquidity. Then we create a break structure and a 5-minute fair value gap. From that 5-minute fair value gap, you expect price to give you either the 1-minute break structure or inversion. Let's see what actually happened. So we dip below into the 5 minutes. We inverse this with this candle. We enter there, put the stop below, and maybe we can target something. It's a bit too large. It's a bit too large in terms of the stops and everything. So this is a too large like stop, if I can say that. So maybe like this. Let's say that you didn't get an entry on this one. It's fine, because this was a too large candle. So maybe you don't get a sell right here. Okay, that's fine. We'll wait. Price, as you can see, pushes even deeper, and all you're looking for is basically the break structure and the fair value for you. So here we get a simple liquidity break structure, but we don't get a retrace into these levels, so nothing happens on this day. Then you get one small push here. You get a tag in with these levels. You might even take a long here and then take a loss. That's fine. You wait, or maybe if you look at the 15-minute, you don't get a break structure, you get a break. So basically you look for the best one to take is this one, because you have a multiple confirmations. This basically just a 4-hour trend that's about to reverse, and you are trying to take the trades and you're getting chopped up. So let's say we didn't actually take any trades here, or we took a few losses and then took the win on the last one, the last reversal, and then you saw a 4-hour fair value gap and took this trade, and then price moves up higher. Okay, so price moves up with this trade, and then moves up, and then moves up like this. Now you see that with this move, price takes another daily level. Okay, so it takes out this level. From here, you expect what? You expect a retracement down. So even from here, you can try and maybe find some trades from here, but I would not advise that because it's against the trend. So you would be trading these much smaller retracements. So I would personally wait, and then you see price reaches back into the order block, and then you can start looking for a setup from there maybe, or you want to wait for even more confirmation. So this was the first one. Okay, now let's look at the 1 hour. You see this move up, you see this move into the order block, so you wait for price to break structure, and then once again price breaks structure right here, or even on the 4 hour. As you can see, it's a break structure right here, and then price creates another fair value gap right here and an order block, this one. Price retraces back into it. You have liquidity right here on this basically relative highs with this one and this one. So once price retraces back into these levels, you start looking for basically this was the confirmation, so now you look for a break structure on the 5-minute. Price reaches here, doesn't give break structure anywhere in here. The first break structure is this one, this candle. So you got a break of structure here, and then you wait for price to retrace maybe or something like that. So, or tap into the like a 5-minute fair value gap or something like that. In this case, as you can see, it doesn't happen. Okay, that's fine. So I'm just basically doing a little back testing because I believe that maybe the time is wrong, because in the span of 2 hours I try to find a setup that is not really there, and the market is just not ready to go in my direction where I want it, in my direction of my bias. If I trade like this, it means that I'm going to catch every single move up from the retracement. So I'm going to wait for retracements of, in a trend, basically. That's what I'm trying to tell you. And then take a trade no matter what the time actually is. That's basically all I'm saying. Okay, so let's see. You wait for a retracement here. It doesn't happen. What do? You wait. You wait, maybe you go up a higher time frame. Just wait until you see what is happening. You get this huge move up without any retracements, but we broke structure here also. So you wait for a high to be put in like this or like this, and you wait for a retrace. Maybe it wants to retrace, maybe it wants to retrace into somewhere else, maybe it wants to retrace. Okay, so you just wait, be patient. Maybe we have something from here. Now we go up on 1 hour. You can see that we have a fair value gap on the 1 hour. Boom, you mark that up. Now you wait. We didn't get a setup before. Let's see if we can get a setup from the 1 hour. In this one we had no retracements, so no setup. Let's see if we have anything here. Okay, wait a second, let me just check something. Okay, very close to the discount area, but we reached into the 1 hour fair value gap. So you wait for a 5-minute break structure. Here nothing happens. You wait a bit more. This can be a break structure. I mean, it is a break structure. Then what do you see? So you mark out maybe like you wait for a high to be put in, mark out the equilibrium. What is this? Also an order block, mark that out. On the 5-minute, price retraces back into it. From the reach of the equilibrium, you start looking for the inversion. So from here, price reaches, you wait for, maybe this was the first one, it didn't get inversed. Let's see something else. Price moves down, doesn't inverse this one, but we leave a wick, and once we once we break structure, maybe you enter right here. Stop needs to be just below that order block. In this case, even the 1 hour fair value, below 1 hour fair value, that's even better. And then target obvious areas of liquidity. Maybe this one, that'll be the best. It's a flat open on both candles. That's good. Target, boom, another trade. Now you wait for even more. You continue to hunt the trend, basically. That's basically what you do. So with this one, you wait. Price moves again, once again. Maybe you can even target these targets. Who knows? If you like to go for a bit higher RR. And with taking these targets, price needs to do what? Retrace. What's this? An order block. Mark it out. See if price wants to react from it. Let's go to the 15-minute. So once again, we are expecting, once we get a retracement, we wait for a confirmation. The confirmation will be the break structure right here. So we start looking for a setup on a lower time frame. In this case, we broke structure and we left a 15-minute fair value gap. So once price drops back into the 15-minute fair value gap, we are expecting what? Here. Okay, so we have, let's first see here. So we have this order block, and the next obvious targets are still these ones. Okay, so these are above, and you wait basically. So you come to the 15. What is this? Maybe this is something useful. Marked out. This is happening after. This is probably the trade that we will take. Even better, it's a 1 hour fair value gap from here. Okay, so you wait. We have the order block. you see all of shops, so you wait for a 15-minute break structure. Then we took out another liquidity level, price retraces back into the 1 hour fair value gap and the 15-minute fair value gap. So from here you try and find a trade on the 5-minute, and you see if there isn't anything. So we put a push down here, we go up, we break structure right here. We didn't leave any like sort of PRA, like this can be called an order block, but as you can see, price runs through it. So you wait, you see that this is actually an accumulation right here. So this is a high pool of liquidity. Once it gets swept, you wait. So basically you got no reaction off of the order block, so you wait. We sweep out liquidity once more, we create a break structure right here once again, and then price retraces back into what you can mark out high to the low, into equilibrium, what in also a fresh order block right here. Boom, equilibrium plus order block. You drop down to the 1 minute and just see if there's anything. So we drop below, we can see price inverses this 1 minute in fair value gap, the big one right here. Stop can be below the order block, say 30 pips, and then obvious targets depending on what you want to aim for. Boom. Let's see the times. 12. Okay, so basically you can see how good price moves on these levels that price wants to go expand from, and the entries are actually solid, even though the times are not like 10 to 11 or like 9:30 to 11 or like 8 to 10 or something like that, you know. So I'm thinking maybe this is all it takes, you know, and then you wait even more. We are in an uptrend on the daily time frame. We are still up. We are expecting price to take out all of these levels and this level and then reach into here. That's my bias for GBP JPY. It has been from here, so we just keep waiting. We took a trade here, we go above, we create another fair value gap. Now what do we expect? Move up here once and then wait for the lower time frame confirmation, then break short fair value gap, boom, something like that, you know. I think that's very solid in terms of price action. From here, honestly, I would not look for a setup right here. What I would do if you are looking at this as the move up and then a retrace would be this fair value gap. So if this price moves here, I would then also look for a buy towards this liquidity. Basically, that's all. That's all I wanted to point out, is that maybe the time is not the best way to like search for setups. Maybe this is the best way, basically. We'll see about this. We'll see about this, because the times that I trade 8 to 10, it doesn't matter that there will always be like a solid setups. I mean, that you are like 100%, not 100%, but that you know that you took the best possible setup you could have taken. So those setups are basically these. You have multiple confirmations, which is why I maybe would like to trade like this more often, or maybe it's better for if so basically I believe that it is better looking at this, for example, because you know the trend, and then you know that once price takes out something, it has to retrace. Once it retraces and make a reaction, you wait for price to retrace back and then take the expansion. It sweeps out liquidity, retraces, it then give you a break structure and a fair value gap. Once it retraces into that, it gives you another expansion, and so on and so on and so on and so on. That's what I'm trying to talk about here. This might be something that I will be implementing a bit more frequently, or maybe, for example, what I can do today, I took a that buy which made no sense because we didn't retrace. So what I can do is actually still trade 8 to 10 or something like that, but actually actually trade the pairs that have this sort of play. So if I see that one pair is in these type of like we are in an uptrend and it just retraced into the 4-hour fair value gap, maybe I trade that pair instead of this pair, if you know what I mean. So yeah, I'm still gonna go over this in my own head and do some backtesting to actually like see what I'm gonna do about this and how will I approach this, because yeah, when trading forex, when trading 1 to 2 pairs, it's not that consistent, because with forex you have to take these hard time frame moves, because the lower time frame does not always like work in terms of liquidity levels. So you have to take the move that is actually the high time frame move, if you know what I mean. So yeah, basically trying to short in all of these conditions will make you lose. So maybe I'm just thinking we can try and trade like this. We'll see about that. It's just an idea. And I'm gonna sit on it a little bit. We'll see what happens. Thank you for watching anyway.